Ladies and gentlemen of the Brypto space, we're live on a Friday, April 12th at 11:31 a.m. This is a topic I've talked about a lot. Frankly, all the shit I talk about is a topic I've talked about a lot. But this is probably most metaphorically expressed as a shattering. And I'm not talking about just breaching the ceiling. What is a shattering? It's something that's structured well, something that's rigid, something that has a known shape and is breaking. Structure is everything. Structure tells you to be comfortable. Structure tells you that everything is normal. If you wanted to put it into some familiar terms, think of your car. It has a nice structure. If the structure of the car breaks, something isn't going well. You're probably hitting a tree. Something is going wrong. So when you look at charts and technical data, structure means just the same thing. That's why we look for ascending triangles and falling wedges and resistance levels and moving averages. Moving averages are interesting. That tell you the average price that may be significant for a large part of market actors. And these are the boundaries and borders of where comfort is defined and comfort is found. And we're breaking some shit today. And this has been breaking for some time, but today was a heck of a move. Remarkable to see a 2% move. And then obviously the volatility, we're down to 0.76%. Holy crap. And you'll see that very much expressed in equity indexes as well. VIX was spiking to like 20 something percent. Um, I wouldn't count on this particular trend line as being rigid in any regard, but generally speaking, lower high after lower high, and this is probably best described as an expression of systemic intervention to suppress the VIX price, volatility in equity indexes in one way or another. Whatever mechanism the powers that be have chosen to suppress volatility in equities, this is the result. The markets tell us the truth of what's going on. Volatility has been suppressed with very obvious effects on price action and equity indices. Had a recent spike in bond volatility, getting us up all the way to 108 on the move indicator, complete bullish engulfing candle on the monthly. So this is a precarious situation with regard to systemic money. Systemic collateral, because in many regards, equity indices is used as collateral as well. People think of it as investment, but the entire world, everything breaks down to money and currency. Money being collateral in one form or another, with a varying interest rate or a varying degree of volatility risk attached. So when you see equity indices with a VIX spike, like what's going on? All right, one piece of information. Then you see move with a volatility spike. Okay, two pieces of information. You see gold breaking out of a structural ceiling. Now you got three pieces of information. You got headlines of geopolitical conflict. You got four pieces of information. And basically, you put all those four pieces together, and it all screams some shit's about to go down. Oh, so strap in and expect some weird shit. Now, I've been saying for months now it's going to get weird. Weird doesn't necessarily mean good. It can be bad, and then it could be good, and then it could be bad again. And I just basically described the cycle between bad and good. And we'll see that expression of bad and good and fear and being content and complacent ripple through the system. Very red day. I'm sure the vast majority of the froth in especially crypto markets is having a very red day because I mean 8% on whiff. All right, fine. But that's not. This is the pinnacle of the meme coin movement. So 8% here is 40, 50, 60, 70, 80% on stuff that is not established. This has, with the market cap, it's achieved systemic significance. It's like, where's Doge? Do I not? Yeah, I have Doge. Doge is literally minus 0.57% of the day. That's how it ingrained that's become in culture that its volatility is relatively suppressed. And this is the type of thing they talk about with Bitcoin going into the future. It's literally down 0.63% on the day. All things considered, with all the volatility that's percolating throughout the system. Volatility imparts fear, and there's a fair amount of things to be fearful of. No joke. Lots about, look at these reds. Look at these reds, 3, 4, 5, 6, 7, 8% on the big W that was released not too long ago. Down large numbers. I think it launched at buck 50, buck 80, maybe a wick up here, probably buck 50. It ranged out for a fair amount of time, if I recall. Yeah, buck 50 was this region right here, 30 to 50, and then it's just been on a steady decline. Jupe as well broke those lows. I was following Jupiter on the daily, and I'm like, is it going to hold that time weighted average price? And bam! It certainly has not. And this is basically where I exited in this region when the time weighted average price failed and started to express itself as resistance. Basically, I have nothing left on Solana in that regard other than the hero uh, uh, position ownership allocation. Phantom minus 4% on the day. Structurally, you want to zoom out larger on stuff like Phantom. It's so far ahead of moving averages that minus 4% is like, all right, it could go literally minus 40% and still be structurally intact from an upward higher low on a monthly perspective. That's how far ahead these types of assets get of trend. Quite remarkable to say the least. I think Phantom is going to be a very exciting ecosystem when Sonic launches, and the best inspection I could think of is volume as well as stablecoin supply to give you a base, real low level perspective on what the hell these markets are doing and how much attention they're getting and how much activity they're receiving as people want to engage with them. Um, technical charts are interesting, but nowadays I really just like to look at the on-chain metrics. Bitcoin, Ethereum. I mean, it's not, look at the low volatility of Bitcoin. That frankly is interesting unto itself. With gold doing what it's doing and Bitcoin is down 0.65% on the day, structurally above previous all-time highs as measured on the monthly. If you go into the daily, you could see all-time highs. They creep up to 73.6 on the daily. But look at where we are from the time-weighted average price. Higher lows, a bit of a flag. Can't deny that flag right there. There's a bit of a lower high. And that certainly is a series of higher lows. Probably even go something like this. Oop, oop, print that, little short-term trend. Zoom in. Why not? Maybe it's a skewed symmetrical triangle, skewed towards obviously an ascending triangle, has a bullish bias to it. Let's see how it ends the day on the time weighted average price. I don't really give a shit about the daily. I mean, we literally have the halving in like 7 days. I mean, structurally, literally, the halving is part of structure, and the supply side is going to collapse 50%. That is a massive supply shock. And we'll see how demand keeps up. Hong Kong is going online as expected, probably Monday, as reported, with Bitcoin and Ethereum ETFs. So that could be pretty interesting considering many factors. Capacity to exit the system. They want to keep people in the system, but so if those ETFs are in the system, that capital remains in the system, invested in those equity brokerage houses, and that would people could have exposure to these types of assets. I think this is a very interesting presentation for the markets. All things considered, with the geopolitical uh, headlines that we're seeing. And gold doing, I'm absolutely fascinated with gold doing what it's doing. That is a these are massive candles for gold. Gold doesn't move like this. December of 23, that is a hell of a wick. But it just ripped through to the upside. You know what kind of capital is required to push it to the upside, considering what the paper markets do with regard to shorting? I mean, how are we not having like a COMEX or London Metal short squeeze at this point? Big percentage point moves on gold, and finally someone stepped in to sell, producing a heck of a wick. That is a remarkable wick on the daily. You look on the weekly, these are just giant green candles on the weekly, and I think gold had its most historic monthly candles in history. Between the close of last month and wherever things land on this month, these are certainly historic candles, and structurally, it is a massive trend break. I love this chart because it goes back a really long time into the 1800s. So we got nice data on gold. Very interesting ceiling. That was a ceiling that was set in 2020. That's years of life, years of humanity. Think of everyone's individual lives and everything that has transpired since then. And that was the structure that the system was presenting. So this deviation of the structure implies the system is different. Something meaningful is occurring in the function of the financial system as a manifestation of nation state interest, geopolitical interest, and conflict, but something structurally different is occurring, or a change in the structure is occurring, and that will have knock-on effects, significant knock-on effects. There'll be interventionary measures, I'm sure, behind the scenes, and if things get to a degree of social unrest, where that threshold, there'll be the interventionary measures publicly to calm the markets. It's not just the markets, calm just literally social order. I've said for years, and I even most recently, at some point, social order is financed. Because finance is the only incentive you have, really, to behave socially. If you don't have, anyway, that's an interesting topic unto itself. I often talk about how everything reduces to an incentive. And how do you easily transfer an incentive? Vis-a-vis a currency unit. Albeit there was a lot of frictions in 2020 when they were doing their airdrops. Those stimmy checks is literally paper checks in the mail, and you realize how stupid the traditional financial system is. Which leads us to the crypto markets as not being stupid. I'm literally dealing with like reconciliation, account reconciliation, my books versus like credit card statements, and it is the stupidest process I could think of because import the damn credit card statements from the credit card company, and that is the books. That's the source of truth. As literally everything we're doing in the crypto space is dealing with this source of truth, the piece of information. So what the hell are we still taking two sets of information and trying to make them look the same when you have the correct source of truth? It's the stupidest thing I could possibly think of. Accountants, if you think this is normal, I'm obviously coming at it from a crypto-centric mindset. It's stupid. Something is wrong. And in software engineering, we deal with things like memory pointers. All right, so fine, you want to have your own books. So point to the source of truth such that the source of truth is presented in your books, not a separate database, a separate table, and you're matching the entries. No, one source of truth, not two, not not reconciling two, not reconciling your source of truth against the source of truth. It's insane. It really appears as insane to me that that is the status quo. Welcome everyone. 119 people on the stream between X and YouTube. Throw your comments in the chat. How you feeling? Calm, cool, collected. Have a perspective on uh, geopolitical uncertainty, macro financials, or crypto markets. You know me, I love these crypto markets. I'm feeling quite comfortable, all things considered, but you got to remember my perspective is a multi-year time horizon. And generally speaking, a lot of people may not digest fully why I'm comfortable because I am most recently inspecting 2022 and 2023 cash flow, of which I have two full fiscal years of data. And at some point, I'll get it in chart form for my inspection purposes. And they're charts, X amount of dollars on a weekly basis, on a monthly basis. So, what are the odds? Inspecting all the data I can, what are the odds that this year's cash flow revenue will be less than the shit that we experienced in 2022 with all of that capital destruction, all of that fear, and all of those bankruptcies and liquidations? FTX literally collapsed, taking the entire damn system with them. What are the odds? And in that regard, it's the easiest conclusion for me to make. I don't really see it. I don't see it. I see these assets are as being in demand at a price point greater than 2022 lows, which means cyclically higher lows are quite reasonable, even if we push towards the lows of 2022. I would expect very comfortably higher lows cyclically, multi-year cyclically. And that's comforting because in hindsight, in 2022, the cash flow was quite effective and useful and really changed everything for me and my family. So that inspection, yeah, sure, you can have the portfolio volatility, but that doesn't really mean much. And that's why I talk so strongly about finding discounts, because if you buy in cash flow at a premium, it's very easy for that principal to significantly devalue. So you want to make sure that when you're buying something, you're buying it where the next speculative multi-year cyclical low is at a higher value. The best way to describe what I'm talking about is, for instance, Bitcoin, logarithmic. So, for instance, if you can see Bitcoin going, what, a quarter mil, but where's the next cyclical low or low? And, just for historical purposes, the last cyclical low was marginally below the all-time highs. All-time high, uh, end of 2017 into 2018, was at 19 and change on the 3-month chart, but the low was at 15. So if you do something similar, the low is at 55. So which implies that the discount on Bitcoin to own it at a price that's lower than something that's a crazy higher low would have been below in the 40s and the 30s. So if you own Bitcoin there, the odds are highly in your favor that in the worst possible scenarios, reasonable worst possible scenarios, you're probably getting down to the 50s. Like really shit hits the fan, war, conflict, financial palpitations in every corner of the economy, the global economy, then you get down to the 50s. But if you own it from the 30s and the 20s, okay. So we've applied this type of long-term time horizon to financial products that produce cash flow. That's why I talk about discounts so much. And meanwhile, everyone loves to chase. They're like, oh, it's going to break out from a price point standpoint. So the principal is going to appreciate. But it's the principal that's the red herring. What matters is the cash flow. The principal. So if you're making 300 grand a year from a $5 million portfolio, and that principal depreciates to one and a half, $2 million, and you're making 300 grand a year, it's a rational takeaway is that you made 300 grand. You still have the same cash flow. And sure, it is a very correct inspection that your principal depreciated, and you could have sold your assets and purchased much more cash flow at the lows, at the depreciated value. One, that requires work. Two, that requires timing. And three, time is everything. And there's no guarantee you could time that well. In fact, the vast majority fail to time any of this well. So while in a hindsight perspective where you know the path of price action, yeah, like sure, that would sound good if you could do that. Double your portfolio because everything crashed 50% on your principal valuations. And now you doubled your 300K income to 600K income. But how reasonable is that? Especially considering the amount of work that's required to potentially achieve it, not be guaranteed to achieve it. Whereas the alternative is the portfolio valuation fluctuated significantly, was very volatile, but you made the same exact money. And then what happens the next year when it bumps from 300 to like 350, 375, 400, 500, 600, 800, a million over cycles, not really doing any work, just understanding that you acquire cash flow positive businesses at a price point that allowed you to neglect significant consideration for the volatility of the principal. To me, that's what I want to experience. I don't want to be sitting watching price points and being in fear. I want to inspect cash flow from a lounge chair. Now, does that seem weird? I don't know. I mean, I guess a lot of people would be like, "Oh my God, your portfolio is going to go from 5 mil to 2.5, and you did nothing about it." But you made $300,000, and then the next year you made more. So to me, that seems rational. At least it's a goal, and goals are choices, and expectations. You want to meet them. So in that regard, just buy shit at a discount. And frankly, the depreciation we're seeing on a day like today is not really a discount. Look at look at the damn moving averages from a three month perspective on Bitcoin. I'll zoom out. I mean, look at the average. The average price on a 3 month time weighted average price for Bitcoin is 38,000. Bitcoin could collapse to $42,000 and be a structural higher low. I mean, literally, we're staring at the data together. And structural higher lows are all that matters. And what you want is to ensure that your price point is lower than the next speculated structural higher low. And that means you got a bargain. You got a discount. You bought at a good price rather than a premium. I have my charts up here of E33 protocols. Eyes are on Curve as well. Curve ecosystem strong as ever, in my opinion. I mean, literally 59 cents with the volatility today. Good to see. Good to see. We'll go through the charts because these things are very volatile. The V33 exchanges. Who's in the house? Killis is in the house. Good morning. How are you? I am DC. Hey, Cap. K-Mets is in the house. Talk about Curve Federation in the house. I mean, it's Aladdin Dow is literally in the house. Hey, man, how are you? Hope everything's well. Any particular reason why BTC is not following the gold move, or has it already made its move and is consolidating? Um, Bitcoin is digital gold. Bitcoin is not digital gold. Gold is gold. Gold has thousands of years of psychological history and it's nation state money. It is literally the money that nation states use. That's why they hold gold reserves. And the nation states that have absolutely no gold reserves are absolutely screwed. Bitcoin is not used as money at the nation state level. So, sure, from a general public level, we hear the discourse, we hear the conversation. Um, but there's a reason why the WEF and you know, all those big boys talk about um, uh, what was the point? They talk about, um, oh my God, I literally just had a really good point. Um, they, they talk about Bitcoin in terms of it not being money, and nation state money is very meaningful. They talk about for a trusted currency, a nation state has to issue it. So what I often like to remind folks is you could dislike other people's opinions and other organizations' opinions, but at the end of the day, it's hard to see and accept truths sometimes. And the biggest conversation we could have about that is the dollar. And the one who really understands that and tells that story the best is Brent Johnson, which I love to talk about that story also because I understand it very well. So when the WEF says things like that, it's true. That's the currencies, and frankly, the bonds are the money, and it's the United States bonds that are the money in the planet, and the gold is the historic money. It's the old money when treasuries are inadequate in supply, or people are fearing them for one reason or another, or there's systemic and structural change. Literally, that's the start of the entire stream today, where we are witnessing structural change in the pricing of base monies, nation state monies. So, as much as general public loves to talk about Bitcoin as digital gold, kind of what the nation states do mean a lot. So uh, I don't expect there to be correlation in that regard. Gold is going to do what it's going to do, and Bitcoin runs on its own uh, uh, path. Now, clearly, that path is changing. It's been very interesting over the last decade plus, and so we're going to see correlation and inverse correlation and things. We take the data day by day and let it tell us what's going on. So right now, gold doing what it's doing and Bitcoin not behaving as digital gold. Is that fucking surprising, guys? I mean, come on. It's all brand new stuff, and nation states are going to buy Bitcoin maybe marginally. The change starts at the margins, but as Brent talks about, all right, check back in 30 years for things to become significant at like a nation state level. So I wouldn't expect correlation. If there's geopolitical conflict and countries are, sniffing out structural change in the global tapestry of financials, gold is going to make a move like this. So that's understandable. If the general public starts to have fear and they express that fear in terms of uh, wanting a digital gold, we'll see that in the data. The general public starts buying Bitcoin hand over fist around the planet, maybe because they can't access gold, and they're fearing their currencies and fearing systemic money, if whatever. We'll see it in the data, and Bitcoin will break out. And frankly, you know, that's kind of where we're heading in some regard. I think. So the big talk of the town is how general public in China is buying gold, and what is it? Um, Costco is selling gold bars in the U.S. and they're selling like hundreds and hundreds of millions of dollars of this stuff monthly. So what we do seems like it's the epicenter of the world, the cryptocurrencies, but what we do is very marginal in the grand scheme of things. It's the truth. And as long as you understand that, you will find comfort in continuing to do what you do, because this is the way I feel most comfortable expressing myself financially. Anyway, I hope that helps. It's a great question, macroeconomic question from a great contributor to these crypto markets. Brent Johnson is the GOAT, read DXY. He nailed it. He absolutely, and mechanically, he describes it with such ease. Um, and it's very simple for everyone to understand. The whole BRICS narrative and nobody wants to use the dollar, it's irrelevant. Why? If country in the Middle East owes another country in the Middle East $100 billion because country A lent country B $100 billion. Country A wants $100 billion to be repaid to them. It doesn't matter what anyone wants with regard to change in the currency composition of the planet. I lent you $100 billion. I don't give a fuck what you want to pay me in some brick shit. Pay me my money. But you got to take that and scale it up. That's the whole damn planet. Everyone owes everyone dollars. The greatest debt on the planet is in dollars. So everyone is being expected to return principal and interest in dollar terms. So the dollar is going nowhere, especially as more debt is taken in dollar form. So if you want to inspect data that would support a regime change at the global level with regard to dollar use as a currency, you want to inspect the debt and you want to start to see a lower high. So inspect 24 over 23 or 23 over 22. Inspect the last decade and see how much debt in the world has been taken out in dollar terms. And my bet is actually it's going up because no one repays their debt. They refinance, and that's Mike Howell's territory where everyone's looking for balance sheet capacity to refinance their debt and end up taking out more because everyone's deficit spending to deal with the deflationary pressures. And we find ourselves here talking about the end of the dollar. Meanwhile, everyone's borrowing more and more and more and more dollars and just refinancing it and literally never repaying it. Okay? So I bet you in 2024, 2025, you'll see an increase in dollar denominated debt globally. And someone wants to get repaid. And they're going to want dollars. Jeff and euro dollars. Yeah, nobody understands it like him. And that's what we talk about a lot is euro dollars and really the composition of currency. And every dollar, 99.9% of dollars in existence have an interest rate associated with them. And a lot of what I talk about comes from him regarding money and currency. And money is used to print currency, and the vast majority of dollars on the planet weren't printed by the Fed or the US Treasury. They were printed internationally. Credit prints dollars, and they go on ledgers, bank ledgers. And the Eurodollar system is this a bank ledger, which is literally a QuickBooks, assets and liabilities, two tables, or two columns in a table, and double entry accounting, and just shifting around liabilities. And the vast majority of dollars are liabilities, and even paper dollars are liabilities of the U.S. Uh, Treasury or the Fed. That's an interesting one because obviously when the Fed, quote unquote, prints currency, they're lending it into existence, so those are liabilities. Um, but I guess, I mean, paper money issued by Treasury may not necessarily be a liability of the Fed, but like a U.S. bank account deposit is clearly very coupled to a liability of the Fed via indirect mechanisms, reserves, and whatnot, because clearly they're first and foremost the liability of the bank that's issuing them. And frankly, any dollar you put into a bank becomes a liability because they're not just leaving it sitting it around, is probably allocated to short-term U.S. government debt. So it's always a liability of someone. So the dollar is that's the construct, the tapestry of the dollar system worldwide. The dollar's going nowhere even if there's geopolitical conflict because someone owes someone dollars. Raul, hello. K-Mat's my man. Good point. Gold versus Bitcoin. Appreciate it. Yeah, I appreciate you very much. Look forward, always looking forward to what's coming. Um, so right now we find us in a period of volatility in a volatile market. So everything is obviously palpitating. You see all the red on the charts is what it is, but structurally, oh my God, look at the premiums. So above long-term moving averages, we're at a premium. Below, we're at a discount. And this is the cycle. Look at the cycle above and below the moving average. And the secular trend is the long-term moving average. Notice how the time weighted average price is sloped upward. So the secular trend is bullish. And for the secular trend to become bearish, check back in like 26, heading into 2030 for structural lower lows. So it takes a long time for these secular trends to change. And you could probably best express that in something like a US 10-year logarithmic. not that zoom, but if you zoom out, and there's you. I mean, can the secular trend change be any clearer? And it took 50 years, 80 to 2022, where it broke out. 51 years, 41 years, sorry. But there was a peak, and clearly this was a blow-off bottom in all any subjective technical inspection. It's clearly a blow-off bottom in rates, and then a blowout and a trend reversal with the higher high. It's a structural change. That's what we're seeing in gold right now. Was trading at 23.91. Finally, because we had a top in 2011, and for the last million years in Peter Schiff terms, we finally started to break out in 2020, and they suppress, and it broke to the upside. This is a structural change, which means it's basically the composition of the global order is changing, because when the composition of money changes, you're really talking as an expression of the global order of nation states. This means something structurally, not just in money, but also from a nation state perspective. Energy, relatively volatile, but kind of flat on the day, maybe at 1%, saw it up at 91 outside the US. US domestic down at 86. Interesting data. Bond volatility is relatively muted today. There's a bid on bonds. There was a big dip on bonds last couple of days, all the way up at 4.5% on the 10-year. That's pretty crazy that we're getting up to these numbers again. And we see that obviously expressed by the nice move indicator with a big spike, basically a bullish engulf. Oh, my zoom keeps going. You go into the daily? No, monthly. Basically a full-on bullish engulfing on the monthly. For normalcy to continue, for the markets to continue, uh, they're going to intervene. And this is why I keep saying it's going to get weird. It's like if there's geopolitical conflict and we start having war and whatnot, of course they intervene. And they intervene with a very simple narrative. All things considered, all this, the climate and the fear of war, we're going to drop interest rates 0.5%. And you know what happens if they do that in those kinds of circumstances? One of two things. Everyone peers through the bullshit and realizes that everything is horrible, or, the bartender just said open bar. So what do you think happens? My bet would be on open bar, government's tab, and there's a frenzy amidst the backdrop of geopolitical conflict. And what is that story? At some point, social civility is financed. Why not? That's the first thing they're going to do. If social civility starts to decay because fear is spreading, how do you counter that? Oh, please, I know you're starving, but don't shoot your neighbor and open his fridge. All right, that's going to get them to act, and they're going to start airdropping money or government-sponsored food programs in all 52 states in the next 30 days, and everyone gets free food. And then they nationalize the farms, and this all heads down a very horrible road because the government has a shit track record for actually doing anything correctly. Nationalize the farms, yeah, like that's going to work out well. But that's the only way you could do a program like that is ramp your production 10x. That we're heading into weird times where things are going to get weird, and you can see some weird shit go down. Like what's going on with gold is freaking weird. Headlines out of the Middle East are weird. It's going to cause a lot of weird things. Heading into the halving, 69,000. It's a pretty remarkable number. I'm not too hesitant on the volatility in good part because of the things I described earlier about how I structure the portfolio. Arrow tried to break out hard last night, all the way up to 230. We saw it at over 900 mil market cap. Absolutely wild. Completely suppressed with a full-on. I guess if you look on the daily, it's a bearish and it's a has a monstrous wick to the upside. But it's not really a full-on bearish engulfing from a 4-hour candle standpoint. But that is flat. on the daily. That is a big move. That's like a $200 million move, 20% something move, a very high, relatively high market cap asset. Mid cap? I guess that's maybe mid cap in cryptocurrency terms. This price action is absolutely wild. Would love to own a clip at like 50 cents. Discount. If I can't get that discount, great. Why? It offers 30% of the money. How many other things offer 30% on the money? Whole lot of other things offer 30% on the money. Velodrome and Slipstream is very interesting. I think that's going to have a big impact on liquidity, on optimism. A relatively small network with small amount of capital, which is important. They're going to bleed that over to Base with Airdrome, which is a network that has very relatively little activity, has a huge amount of dollars at this point, which is pretty interesting. I mean, let's look at the data rather than just people taking my word for it. 1.8, 1.879, 21% week over week in dollar supply. I think Coinbase is trying to figure things out from a corporate perspective and what they want to do. And I think they're clearly flooding the system with dollars, which is very interesting to say the least. But then if you go over to volumes and you take a look at Base, Base is sitting at minus 18% week over week with 400 mil in volume on the daily. So 48, 12, 16, you're talking about 20% or less, like 18% of the total dollar supply is contributing to volume. If we're talking in terms of literally just dollar activity, but clearly we have cross currency activity, like ETH and asset denominations in an LP. Um, which is an interesting perspective because everything in meat space is a dollar transaction as the intermediary. But in the crypto space, you're literally talking about pairings of non-dollar pairs. It's a very alien type of landscape relative to like meat space accounting. Very interesting though. So contrary to popular belief, Aerodrome is small, very, very, very small compared to Uniswap. Uniswap does $337 million in volume on Base versus 58. That's very, very tiny. Slipstream should help. And I look forward to what Alex talks about, where someone could encroach on Uniswap's dominance. Any chain they're on, they pretty much are dominant. There's one chain Uniswap is on where they're not dominant. And this is actually a great example that I could bring up. Look at Binance. This is actually fascinating. So Uniswap is dominant on all chains except Binance. Why? It's very simple. And please take this home. Write about this shit. First mover advantage. It means everything. And Pancake had a long first mover advantage. Pancake dominates the shit out of Uniswap on Binance Smart Chain. That is always something I found very interesting. One other example, there is no Uniswap on Avalanche, but Trader, Trader Joe is just overwhelmingly dominant. I mean, you're talking about like 12, 13, 14x to the next volume on Pangolin. That is just dominant, dominant. But that's big collapse week over week in volume. Microscopic chain, 70 mil in activity. Phantom microscopic 19 mil. Almost a bill in volume on Binance Smart Chain. Network with a real DeFi network, not Tron. Whole nother story with Tron. But the second most highest quantity of stablecoins in these crypto markets. Ethereum volume, marginal down. It was at positive territory for a little bit, which was something interesting. But look at the volume. That's big volume on a daily basis. Nothing compares to mainnet. $2.4 billion worth of financial activity. This is where the activity is occurring. So as much as the smaller actors with the small positions, the meme coin and the frenzy and all the excitement over the last months has been occurring on the relatively inexpensive chains, the vast majority of financial activity occurs on mainnet. It's just the data. The data indicates that only marginal activity occurs elsewhere. So folks can be salty all they want about, oh, it costs 50, 75, $100 transaction fees on mainnet, but the people that are engaging in $2.4 billion worth of activity don't give a shit. So that is what the data says, and that's meaningful, which screams like disenfranchised, where you're priced out and you can't engage in these markets. And even myself, I prefer to engage in L2s. I don't want to pay $100 transaction fee if I don't have to. But you think someone throwing around $10 million worth of LP or doing big swaps like that and big transfers like that, do you think they give a shit about $100 transaction fees? I bet you don't. They don't give a shit about $500, $1,000 transaction fees. So food for thought. Very important to process that. Arbitrum still positive. Week over week, 11.44%, 640 mil in activity. That's a lot of activity. Arbitrum 640 compared to 451, much more activity on Arbitrum as compared to base by hundreds of millions of dollars. Interesting that Airdrop's doing $58 million a day in volume, and on Arbitrum, Ramses is doing $73 million a day in volume. And this is just a very objective data observation that something that is an 8 mil market cap is doing $73 million a day in volume compared to Aerodrome at 50 something mil a day in volume with $767 million in market cap. So Aerodrome is priced almost 100 times the relative price of Ramses, doing a fraction of the daily volume. So those are the types of things when I look at data, I'm like, all right, what does that mean? It probably doesn't mean much in the short term because I'm literally still reading through comments on X where, oh, I'm going all in base. I'm going all in on Aerodrome. Coinbase is going to be a flood of capital. Everyone and their mother is going to move money over from Coinbase over to Base. It's going to change the world. Okay, I like the sentiment and I agree that that's going to occur, but I surely wouldn't discount the countless billions of dollars of other infrastructure. And I wouldn't discount how big the world is and the demand for markets and the demand for options and choices. So do you think Base is going to be more popular in the US versus Binance Smart Chain? Do you think Base is going to be more popular in China versus Binance Smart Chain? Binance Smart Chain is clearly a very Asian-centric network, Eastern-centric network. So you're really going to have geopolitical divides between economies. So that just is literally a rational observation. You're going to have markets. No market is going to take over everything, and you're going to have distribution, diversification, free flow of capital between these markets. So I'm very excited for Base to keep doing exactly what it's doing, but sure as hell there's going to be a massive amount of financial opportunity in countless other markets. So do not fall into chasing so easily. You don't need to. What else could I pull from the top list? Polygon, I still think, yep, up a little bit marginally week over week. Microscopic, 95 mil. These are small volume networks, all of them. Tron doesn't even show in the top list anymore from volume. It has the stable coins, but doesn't really show here, I don't think. Oh, it should though. Tron. Yeah, it's just off because it's all Tether and it's out of DeFi. It's a very different story going on over there. Anywho, um, Nile looks interesting. Printing some nice returns. I got the other charts up here. Eh, it's very weak on Linnea, the amount of volume on the network, but that's actually an interesting one to look at from a volume standpoint. Check this out. 60% in this kind of market, 60% week over week increase in volume on the network, $23 million worth of volume. And if you go over to stables, open like a new tab, Let's go over to stable coins on Linnea. Uh, no way this 550,000 is doing $27 million worth of volume. I don't think that's the case. I think it's such a small network that we don't have a full inspection of available assets on chain relatively on that particular chain. But 47% week over week change in stablecoins? I don't know. But when I see numbers like this, I'm like, yeah, that's what you want to see. You want to see an increase in volume. That's what you look for in chart data. Pick a chart. Look at the aerodrome chart. No volume, no volume, no volume, spike in volume, which means a spike is of purchasing, but that also indicates social trend. That indicates more actors are purchasing, they're more interested, and something is changing. So structurally, something is changing. Generally speaking, my broad expectation is aerodrome ranges between this price, 80 cents, maybe two, maybe it keeps going. But this is a hell of a market cap considering where we are, and I expect a lot of things to catch up because a lot of things are just as significant. That's probably the biggest point that I can make. Uh, Also have equal up. I've been following equal, but Phantom is a very marginal chain as we've inspected from a volume and a stablecoin perspective. And I would love to have an equal position, but it's up like 40x from bottom. It's just nuts. I can't stomach those kinds of numbers from a buying something perspective because I don't buy something to sell it. I buy something to own it. And that's not something I want to buy because I literally talked about this whole stream. I want to buy things at a discount, and I don't think it's at a discount anymore. It's literally at, this is a heck of a technical chart. It's absolutely lovely from a technical standpoint. And the fact that it's a $4.34 million market cap is quite extraordinary. If this flips this level into support, that's a lovely, lovely chart at 4 mil. Go 150x to get to the market cap of Aerodrome. Meanwhile, it literally does the same thing. Absent Slipstream making its way over to Aerodrome from Velodrome. But this is very interesting. But look at the market activity on Phantom. It's relatively mute compared to base. 19 mil worth of volume on Phantom versus base at 451 mil. Whole other story. And that's why you get this price action in Aerodrome. You get this concentration of capital. Also because of the significant absence of financial products and services on base. The, not compared to Phantom necessarily, but compared to Arbitrum, tremendous, tremendously more financial infrastructure on Arbitrum as compared to Base. One, because Base is newer, and two, just because that's the case. There's less financial infrastructure, the capacity to do foreign exchange, the amount of exchanges, the amount of credit protocols, lending protocols, the amount of derivative protocols. It just doesn't have the infrastructure. It hasn't had the time to build it out. But clearly, with the amount of dollars going over to base, it's surely going to have the incentive for builders to migrate over there at some point. And we sure as hell have the capital rails. I mean, Stargate just goes over there, boom, for pennies. The capacity to trade between L2, L2, and Alt L1 has become quite extraordinary. I mean, talking about pennies on Stargate, it's really wild, and it takes like 3 minutes. That tech stack is quite extraordinary. So I'm very interested in seeing what Tapioca does from the concept of an omni-chain stablecoin, seamless cross-chain liquidity, where you have a stablecoin that is a stablecoin on all chains, omni-chain. It's something that we've kind of not seen yet. We still have this tokenized representation cross-chain, where you have a a start chain that accepts the collateral and a tokenized mint on the destination chain. So that's big. That's talked about in Stargate. It's talked about in CCIP. This tokenized representation. But probably the next conceptual step is omni-chain. The asset is the asset on all chains. What does that even mean? But I think that's the inevitable end state for this tapestry of chains that has emerged. So many chains. How do you make an asset that is an asset on all chains, not just the tokenized representation on some? I think that's an interesting technological concept that probably is borderline philosophical. Athletic concepts in the house. Hey, coach, incoming. Yeah, I mean, things look great. I'm very excited to see that Nile is very performant. I'm not going to complain about 500. It's 2 grand a month. I'm not going to complain at all. Ramsey's was a very nice week as well, about 700 so far. I mean, it's just the start of the week as well. You have half the week remaining, so I'm very motivating to see this kind of productivity. As the market has decreased, depreciated to a degree of late, DeFi has trailed and lagged the frothiness in the capital gains part of the market, the meme coin parts of the market, but things have done quite well. So from a meme coin perspective and the frothiness that community wants, 10,000, 100,000% returns, in so many conversations, especially compared to like traditional financial folks, if you tell someone you started the year and your portfolio is up 80%, you've outperformed equity indices, you know, that's crazy. And they're like, holy shit, you did 80% on the year, the whole portfolio. It's unheard of in traditional financial. You talk about like hedge funds maybe do that on the margin. Uh, but, that's big numbers. That's big stuff, and that's probably the realm I'm in since the beginning of the year, maybe 80%, 90% so far in the year. And to me, I'm like, all right, that's extraordinary. I'm very content. I didn't turn $100 into $100 million, but I don't give a shit. I don't want to do that. You need to find your path and stick to it. And hopefully your path you'll be comfortable with and you'll meet your expectations because then you're happy and then you're content because you're achieving what you want to achieve. You and you alone can define what you want to do. And you have to find a way to be happy with what you're capable of. That's some important points. Website is not loading for me. Can you show us Nile Exchange and how it relates to XYZ? Well, Nile's productive. Rebase is at 13.58%, and it's probably at, depending on variable factors like protocols that are renting votes and variability in volume, which is actually just going absolutely vertical at 60 something percent week over week. Uh, you're looking at 70 to 120% APR. And this is like my first week of voting, so but that's generally the inspection. With the vote rentals that occurred this most previous week, you're looking at least over 100% APR, which was quite interesting. Um, it's a microscopic chain. We don't know where things are heading, and there's risk in all of this shit. But Linnea has an interest. I have confluence that supports the decisions that I make. And the confluence is that Linnea is of interest to consensus. There's a fair amount of capital getting thrown around. They have a vested interest in Linnea doing well because they created it. It's a big name compared to the likes of Robinhood and Arbitrum and Coinbase and Base. That's meaningful. It's a hell of a week over week in volume in a market that's relatively flat right now. So there's a lot of confluence that supports this being interesting. Clio on Mantle is lagging quite a bit, but Mantle has the very core integration with Athena, which is interesting to say the least. Merchant Mo is killing it with the volume, but Cleopatra is lagging, but it's up 62% week over week. And notice volume to TVL, Butter XYZ. This is a V3 fork, Uniswap V3. So we're very nascent. We don't know where things are going to land here, but we have some early indications that V33 does find its way to the top of volume on exchanges. Note it's a relatively microscopic network at 25 mil. Merchant Mo, an extension of Trader Joe, and Trader Joe is the owner of Avalanche. So they have strength. And they sure as hell have meme strength. They are very strong with regard to marketing and branding. That's a big deal. So that's a big amount of competition, but they don't offer the incentive liquidity financing that something like a Cleopatra will. So we do have clear experience knowing that Cleopatra has a capacity to do significant liquidity financing, such such as it does on Velodrome, on Optimism, and Aerodrome on Base. So that is interesting. In that regard, that's the only offering, and it happens to be at the top of the list from a volume perspective, a decent volume to TVL, and a very large week over week gain. So this is very early data, in my opinion. Much more interesting from a Linnaeus standpoint, stronger narrative, consensus over Athena, but 276% week over week, fighting with Linex at the top, and Linex is a VE33 fork. So it looks like you have a situation where there's a binary set of leaders. So guess what? The whole damn world reduces to binary phenomena: Team A versus Team B, Republicans and Democrats. Think of everything. Everything is binary in reality, and you very rarely have trinary systems, to such a degree that in astrophysics, trinary systems don't work. They collapse, and they have all sorts of weird phenomena that occur. But binary, you could expect some sort of stability. Trinary often decays. So there's very much the case that, oh, look at Uniswap and Curve on mainnet. It's a binary reality. And there's nothing, it's not even close. I mean, Balancer is well known, but look, it's like the Green Party of the political system. It's small, very small in comparison. You have your two dominant actors, and you could fight it out amongst yourselves who's the Republican and who's the Democrat, but clearly you have big volume on Uniswap, but nobody would argue that 333 mil with the next closest being 79 is not a dominant position. So this is a binary reality for these markets. Very, very interesting. I love the data. The data gives me confidence. I find my confluence. I find my supportive pieces of information that help me keep rational in a very irrational space. It's very hard to be pure rational in this space, especially when you see $1,000 turns into 10 mil, and that's cool. That's great. You know, one, two, three people did it, maybe 10,000 people in the entire phase of degeneracy amongst hundreds of thousands, if not millions of people worldwide. It's a lottery ticket, and that's okay. That's okay. There's nothing wrong with that as long as I could charge them 0.04% on transaction fees. So you go ahead. You have your fun with your meme coins. I just want to click claim on those transaction fees. I'll have it my way. Find your way. Be who you want to be and stick to it. Define your rules. We spent the last couple of years talking about rules. One of the most important ones is find your damn discount. If you want to adhere to this type of methodology, I was going to say ideology, but more so methodology, define your rules. Set your limits, your boundaries, the structure, and even most importantly, set your expectations. Please, if anyone has any questions, 216 people live with the captain on a Friday. Hit that comment section on X. Type some letters on YouTube. Let me know what's on your mind. If you have anything you want to talk about, I'm more than happy to cover it as we get to the last couple of minutes of the stream for today. Down below 69 finally on Bitcoin, 68.9, upper 68s, 1.59% of volatility. Where's gold at? 2370. That's crazy. Systemic, oof. This is Mike Howell's wheelhouse. Look at that chart for Fed balance sheet. And this, you know why this is pumping? Because Treasury General, the TGA, got drawn down by a lot. Where is it? I got it somewhere in here. Um, I don't know. I have it in here. Here. 8%. That is a big drawdown. There's like 60, but it's more. It's like $100 billion drawdown. Absolutely large drawdown in the Treasury. So this inspection is the Fed balance sheet minus the TGA minus reverse repo, and reverse repo is marginally up 2.14% today. You can't look at these things on logarithmic, but just look at directionality. That's clearly down. So relatively speaking, things are looking flush. Let's look at the National Financial Conditions Index. I have it somewhere. Minus 0.53. Loose as a goose, baby. System is flush with liquidity, which is supporting markets, supporting relative structure with regard to access to capital. Not at the real economic level, because clearly interest rates are going to shut down uh, uh, real estate, both at the public and commercial level. Seeing these incredible discounts on real estate at the commercial level. Oh my God, like a buck 50, 15 cents on the dollar, 90+% discount. There was a $200 million office building in St. Louis that sold for like 3.5 mil. Oh my God, buy an office building when this entire cycle is over. What else? Financial conditions index. Um, I mean, it's really the move indicator. It tells us the short-term volatility that we're experiencing. National Financial Conditions Index being loose, Fed balance sheet minus TGA minus RRP showing an increase means that's how they're supporting the system, either intentionally or unintentionally. It's irrelevant. The market doesn't care. But the move indicator is showing us why we're having the volatility today. The bond market over the last couple of days has been volatile, and that has knock-on effects. The move indicator is a leading indicator on systemic volatility. Obviously more or less real-time indicator for bond market volatility. Obviously, it trails like a day or so, but it's a leading indicator for like equity indices and surely the crypto market. Very powerful, powerful indicator in that regard. So when you see, so this is the monthly, it's relatively short term. Zoom out to the 3 month, and when you start to see stuff like this, October of 20, what do you think happened in December of 20? January of 20 when you saw the wick through. So this is when you see a hammer, an inverted hammer at the bottom of a move, a downward thrust, especially a lower low as this chart depicts. This is potentially a reversal candle. This is an expression of strength to the upside. And then what you look for is a continuation, a higher high and a higher low for that matter. And that's exactly what this chart printed. And then it just carried through for all these months since then. You zoom in on the monthly, on the move indicator and that time frame, you see the higher lows, literally a bearish engulfing following that giant wick, but then it wasn't really a full bearish engulfing. So there you go. There's a potentiality for a higher low, and there you go. And then you had a big break to the upside through the 50 SMA on the monthly, right through the time weighted average price, and we're off to the races in 2020 with bond market volatility on 21. Very interesting chart. This is very powerful. This will be very useful to us heading into Q2, Q3, Q4 2025, early stages of 2026, where we'll really get a sense of what the hell is going on so we can make the best decisions possible. Uh, Daniel has a question. Do you think the NASDAQ is at greedy levels? Honestly, I don't really care. I who buys QQQ? I don't know who buys that shit. I mean, anyone with a 401k is not even buying it. They're buying maybe I don't even know. I don't know who buys it. I don't know anyone who buys that shit. I mean, with all things said and done, what's the point? I, it's a technology index for companies, and we've been screaming for the last 4 years about these being companies that we invest in. These companies have no human resources, no real estate. They have no capex, no opex, no benefits for human resources. It's just pure cash. These are pure financial businesses. There's nothing interesting in the equity indices. It's literally reminds me of the tweet I did last night about reconciliation of from an accounting perspective, how stupid it is. And to me, like these stocks are stupid. Uh, Flatten needs to be a clean sweep of corporations, of middle management, and the automation that's possible with not just smart contracts, but robotics and all the waste. It's so inefficient. And I don't want to invest in that bullshit. It's horrible from to me from an investment standpoint. Like, what's the potential? Now, I appreciate society needing, employment structures and corporate structures to facilitate employment for people and the desires and needs of people. But from a business perspective, it seems like there's so much waste when so much can be automated. That changes everything because automation provides consistency, provides predictability. And when things become normal and low volatility and predictable, things do well. People get comfortable. There's less fear. Think about like Fed funds rate. If under these conditions, the Fed funds rate goes up 0.25%. If under these conditions, the Fed funds rate goes up 0.5%. If under these conditions, they go down 0.25%. They go down 0.5%. If under these conditions, this happens. Predictability. And that's exactly what smart contracts define. Determinism. I said predictability. The better word is determinism. Deterministic changes everything. Immutable determinism changes the world. Unchangeable deterministic behavior. That is a crazy, crazy sentence. Maybe I say that the way I do with the emphasis that I do because I'm an engineer. That is a crazy sentence. Immutable determinism. All the bullshit you encounter in life is so much accountable because of by people and choices. Now, I'm a person, but I'm not consistent. I'm emotional. I'm an emotional mess. Software is not. And what does everyone want? They want to be with someone that's predictable and consistent and reliable and dependable. They want a company to work for that's predictable, consistent, reliable, and dependable. They want politicians that are predictable, consistent, reliable, and dependable. And none of them are because they're humans. No, we could appreciate humans and we could support humans and we could do things well for humans and we could do those things well with software because it takes the human out of the equation because humans are a pain in the ass. I hope that helps. DA advisors in the house, the cab, Shabbat Shalom to you too, my friend. Hope everything's all well. Man, I have some streams by the cap to watch. Had a quick stream last night, but obviously we're here on a Friday talking about the real world and what is going on. Era's in the house. Good afternoon, ladies and gentlemen. All right, I think we've gone over a lot today. Cap, we had on llama risk. That's important because you want to assess the risk before you begin to start to trust. And trust is everything. Because once you're able to trust an immutable, deterministic piece of software, it will just get more trustworthy into the future. And that changes the world. So I'm excited for these structural changes to occur where trust is minimized. Choices are more predictable, more deterministic. Outcomes will be more deterministic. And that is comforting. Think of everything in your life where the outcome is probabilistic and you have no idea. It's kind of murky. And replace that with determinism. Under these conditions, this will occur. It is comforting. Captain Serendipity. I go by many names nowadays and many hats. Thank you all for joining me today. I appreciate all of you. You give me a good Friday. I love to talk about these topics with you guys. 236 people made it to the end of the stream on a Friday. I wish you all a wonderful day, and I hope everything is calm, cool, collected over the weekend. Tell everybody to subscribe, either on X, on YouTube. It's all good. We're going to keep doing these streams all through the Bulls and the Bears, and then the Bears and the Bulls as the cycle continues. I will see you all next week. Peace.